let's move on right now. We're going to go over here on the screen to ord-oracle.com. Of course, we have Tim come on every Tuesday and Thursday. We really deeply appreciate his analysis. We go over gold miners, GDX, and then, of course, the general market. And when Tim was on last time, we were talking about potential bounce to the upside, and if we didn't have enough volume up there, potentially tracing back. It's been a little bit choppy since then. A lot of that pattern kind of played out, and definitely looking forward to hearing about what Tim has to say on this today. Tim, how are you doing?
Good. Are my charts up?
They're saying your chart is not up, but I'm going to work on getting it up right now since you sent it to me. So.
All right. We'll try that then.
Yeah, absolutely.
All right. All right. So anyhow, we got chart one. This is the chart I'm kind of leaning on. I know the S&Ps were up today, but we really didn't get a real powerful signal.
Totally.
I thought we might bounce because we tested the previous low of April 10th. On a lighter volume, that means you're going to bounce. But we didn't have a trend or a panic reading in the trend to really determine to be a worthwhile bounce to the upside. But anyhow, what I'm looking for now is this trend. I got the bottom window here is the 3-day, next window up is the 2-day, next window up is the 5-day trend, and the top window is the 10-day trend. 10-day trend is the most important of the trend moving averages because that's basically 2 weeks of panic. And you get 2 weeks of panic, you're going to have a worthwhile rally that could last weeks, maybe even months. The 2 or 3 or 5-day trend, you can bounce maybe a week at most, but you get so anyhow, in a nutshell, the 10-day trend is 103. So even though the market's bouncing here, this is not going to be a long-term bounce.
Right.
So let's flip to chart 2. This is something that's kind of developing here. I think we're actually making a bottom in the market, and the last low we had, I think it was April 7th. We actually had a sign of strength off that low. And there's different signs of strength. There's this wag breadth thrust indicator. There's a volume strength. There's happens to be an advanced decline strength type thing. And it's basically a 5-day average of the advancing over declining. So it's kind of a ratio thing. So anyhow, you needed to hit 0.3. Or excuse me, you need the 5-day average needs to hit 0.7 and needs to rally to 3 or higher within 21 days. And I marked the times going back to 2021 in shaded pink areas where they occurred at. And we had at the 2022 bottom we had 4 of them. On the rally up from 2023 we had one. We had actually one back in January of this year, and we just got another one. And I think this one is going to probably establish a sideways trading range.
Yeah.
And so you got to have a selling climax, then you got to have a sign of strength. If you don't get a sign of strength after selling climax, you're going to get another selling climax. And you're going to keep getting selling climaxes until you get a sign of strength. And the sign of strength defines when a bottom starts forming. Mm-hmm. And so we did get a sign of strength off this. So I'm concluding we're going to start forming a bottom. All right. Let's go to chart 3. This is honing down into the smaller time frames. But the timing 3, anyhow, if you look at the volume chart on chart 3, I have one marked selling climax.
Yes.
And then I have a green one a couple of days later. It's the sign of strength. That's the SOS. So that's how I know we're bottoming out here. Plus, with that previous chart, if you go back chart 2, you have a sign of strength off of advanced decline. So now I'll switch back to chart 3. And so now you got a volume and you got advanced decline signs of strength off the lows. So you're definitely making some sort of a bottom here. How lasting a bottom? I've been thinking at best we're going to go back up to the March sign of strength day top, which is that green arrow will have sign of strength. That's up around 550. That'd be the best we could probably form, because to get through that high, you're going to need volume to be up around 250 million shares. And I doubt that's going to happen because we're running about a heck of a lot less than that.
Definitely, yeah.
Yeah, so we're not going to get up there. We may get up there, but we're probably not going to get through it. So that's the maximum upside target you're going to see. Then from there, we can't get through that high. What the market does is we can't go up previous high, reverse, and try to take out the previous low. Well, that previous low is actually that same day again.
Yes.
Which is, but we may get through that low eventually. We'll probably go down, test it. We may bounce a little bit. Then finally, at some point, we are going to get down to the selling climax low. And that's where the significant low is going to form. How long all this stuff is going to take? Could take weeks. But all you're doing now is chopping inside of a market that may go up a couple, 3% a day, which is not bad, but you're almost day trading because these rallies, declines are not going to last. Not until you get down to really the March 7th low. And if we can't get through that low, we'll probably start extended rally past 550, maybe higher up. But if you look at the bottom two windows, kind of see where we are. The 21-day average is coming at 103. The 10-day, this is yesterday's close, also 103. You need them both preferably up around 1.2, preferably higher. So all this stuff right now is pretty much day trading. So that's the S&Ps.
Let me ask you before we go into gold. With that kind of rejection, not necessarily rejection yesterday, but I mean, we are bouncing off from yesterday.
Right.
The day prior didn't have any volume at all. I mean, are you seeing significance of that? I mean, is that kind of like a near-term kind of trading range for you? Or, I mean, is it just kind of how it shaked out?
Well, what we're doing, we're bouncing off the April 10th low, which is I had that dotted trend line going across. Well, we tested that low, April 10th low yesterday on a lot lighter volume. If you do comparison volume, which I wish I could draw where that is.
I see what you're saying. Yeah.
But yeah, we're testing. Couldn't get through it. Volume was about half. So if you can't get through the previous low, we'll go up to the previous high. Well, kind of yesterday, we did gap down yesterday, so now we're kind of testing that gap. And you want higher volume today than yesterday. If we do, then this rally will continue to the next higher high, which is basically a high of a couple of days ago. And you keep going until volume drops out.
I see.
But as long as the volume is equal or greater than the previous high, the market will keep going higher. So today we probably got some legs. We'll go up a little bit, maybe 540, which is a little high up there. I don't know. We'll get to there or not. Maybe we'll get to 550.
Perfect. Tim, please stay right there. I know we want to look at GDX as well.
All right. I'll be here.
Folks, stay right there. We'll be right back with Tim Ward after the break. Welcome back, everybody. This is Jacob Schuper, joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. We just have a short segment left. Tim, I really want to just get in quickly to what you're seeing with GDX.
Yeah, let's go to chart 8.
Yeah.
This is kind of an important chart. This is the HUI, which is a gold bug index, and then the NDX is the NASDAQ. And the chart goes back to 1993. There appears to be a 12-year cycle in this HUI index ratio. In other words, when this ratio is rising, gold stocks are outperforming the NASDAQ stocks. When it's declining, index is when it's declining, HUI is underperforming the NDX. And I think a big turnaround's come over. If you look at 2024, actually 2024 matched the low of 2000. This ratio did, and we had it kind of fumbled off the bottom, but over the last month or so, we had a sign of strength to go to the RSI, right above the HUI index. You're up around 65 now. That's a sign of strength. Normally, if you look at through the RSI going back to 2000, you had an area which stayed below 50, which is I shaded in pink, and you had areas above 50, which I noted in light green. When it's light green, the RSI is basically staying above 50 or higher. And that's what happens in uptrends, because that measures the velocity of the HUI index. In other words, it's an uptrend. When the RSI is greater than 50, then HUI index is going up. When it's less than 50, it's going down. And normally, you had a sign of strength off of that. The ratio had a sign of strength and pushed the RSI up.
Well, Tim, I'm sorry we had to cut it.
So
yeah, really looking forward to Thursday. I'm sorry we had to cut it short this week. Yeah, looking forward to hearing some more on Thursday.